Hello guys, welcome back to the life of a day trader. Today I want us to discuss a very simple but popular question in the forex space, more especially among beginner forex traders. And this question is, when is the right time to click the buy or sell button in the market? So I have seen several videos here on YouTube discussing this particular topic, and most of the videos that I saw discuss deeply about the market structure, the support and resistance level, and other key zones. At these zones that you need to take trade, this is where you need to buy. But the problem remains that when the market comes to this key zone, many people always jump in very early or maybe jump in very late, leading to accumulating of losses. So today I'm going to show you with a practical example the exact time that you need to click this button, buy or sell as the case may be. So without wasting much time, I want you to stick to the end of this video. Definitely you are going to learn something new that will help you in your trading journey. So let's go. So obviously, for you to understand the actual time to enter a trade, to buy or sell, you must at least have a simple or basic knowledge about forex trading. You must understand the market structure, order blocks, fair value gap. You must understand the support and resistance level. Like, all your knowledge about forex trading is necessary in this aspect. So, but I'm not going to discuss deep about support and resistance level or market structure. So I'm just going to show you the key zones or the key levels and what you need to do at these key levels, because that is where the problem is. Many people have the ability to identify these key levels, the support and resistance level, the direction of the market, order block, and everything. But the question is, when do you enter when it comes to that key level? So without wasting much time, I just want to show you this. We are going to use this particular chart, the chart of GBP USD, to discuss this topic. So first of all, this is daily time frame, and I just want to show you that the market is in an uptrend. I just want to show you the direction of the market. I'm not going to discuss much about it. So uptrend, you already know the meaning of market being an uptrend or downtrend. So if it is creating higher high and higher low, then you know that the market is in an uptrend. It is creating lower high and lower low, you know that the market is in a downtrend, or depending if it is in a range market or thereabout. So currently this particular market is in an uptrend, and also all these horizontal lines that you see here marks the support and resistance levels in the market. So I'm going to discuss what happened here. You understand? The exact time you would have taken this particular trade, because if you look at this point, the market is trading on the trend line and also trading on this particular order block here. As you can see, you can regard this one as the order block or this one, but this one initiated this particular run. So this bearish candle is the last bearish candle before this bullish movement. So some other person may take this as a support level, because this particular point the market was rejected and now it is a support level. So some other person may see it as a support level. Let me just mark it off with a horizontal line. Some people may see this as a support level, okay, and other people may consider this order block, okay, or maybe some people will consider this place as the demand zone. Let me just also mark that off here. So what we are going to discuss is, when is the actual time to enter trade here? Because if you look at this, this is daily time frame, which means this is day 1, day 2, day 3, day 4, day 5, day 6, day 7 before this movement happened. That is exactly 1 week. So when the market dropped here and touched this particular support level and this trend line, what would you have done as a trader? So we are going to look into it, and from there I will show you the reason why you should wait. You shouldn't be scared of jumping into the market, and the exact time you need to enter a trade. So let's get down to 4 hours time frame, and I will show you the common mistake that most traders make at this particular point. This is very common among most traders. When they wait for the market to come to a key level, they are always very inquisitive to enter the market, thereby taking out before the right time to be in the market. Now, let me first of all remove this particular trend line so that this will be a little bit clearer. I think it's better right now. Okay, now, so if you look at this is the support level, and this is an order block, which means there are two key significant points at this zone of demand. Let me just consider the whole of this point as zone of demand. So if you look at this particular run that led to coming to this zone, you can see that there are two gaps. There is a gap here, and there is a little consolidation here before the next run that dropped into this particular zone. Okay, these are significant things that you need to take into consideration when you are looking at a key zone. So this first candle that dropped into this zone, if you look at it, it created a bullish engulfment. This particular candle was engulfed by this bullish candle, which is a sign of reversal. Now, many traders would have entered this particular trade the moment it returned at this particular point to retest that particular support zone. Now, let's say for instance, you entered the trade at that particular point. Let me just show it. Let's say you entered the trade at this point, and you placed your stop loss just a little bit below that engulfment. You placed your stop loss a little bit below the engulfment, something like this, and your take profit somewhere here. Now, definitely you would have been taken out of the market when this particular movement retests the zone. Now, the reason why I told you to look at the run that led to that particular zone to know how many gaps before then is because there is always high probability that the market will first of all, if there are two runs, okay, that if there are two gaps, that is what I mean by runs. If there are two gaps before the market reaches that particular zone, there is always high probability that the market will first of all visit the first gap and then retest that particular zone before it continues in that direction. I have tested this several times, and I can tell you categorically that it always happens. So what you need to do as a trader is that when the market visits a particular zone, and if you look at the run that created that movement to that particular zone, if you see two gaps, like a consolidation in between that run, always expect the market to first of all reach the first gap, then come back and take the initial run that created that particular movement. Definitely market will come back and take it out, more especially where there are two, maybe a fair value gap or other block within that zone. It will try to retest that particular zone again. Then at this particular moment, once there is a break of structure like this one that happened here, that is exactly when you enter the market. I will show you how this particular point is a break of structure from hourly time frame and 15 minutes time frame, and how you would have entered the trade at this particular point, not here, to be in this particular run. So going down to 1 hour time frame, let's get down to 1 hour time frame. Now in 1 hour time frame, I'm going to show you something very significant here. This is the point that we are considering. Okay, Now, from 1 hour time frame, you can see that this particular point, okay, mark here, this is a break of structure. And this particular point that you are seeing here, let me first of all change the color of this to maybe green. Okay, and this particular point you are seeing here, this is liquidity. Now, what happened here? This is very simple. What happened here is just a liquidity sweep. Let me kind of increase the size of this so that it will be more visible. All right. So as you can see, when the market returned, looking at this particular point, this is a liquidity already created in the market. So when the market first of all come down and sweep it out, sweep this liquidity, then returned up and break this particular structure here. Now, this is the exact time that you are supposed to be in the market, this particular point. This is exactly where you're supposed to enter this trade. You would have entered it here, or you would have entered it here, or you would have entered it at this particular point. So this sweeping of liquidity and touching down into this particular order block have already showed you that the market is ready to reverse. If you look at this particular gap, this is the gap that I told you, that when you have two gaps created before market comes to a zone, there is always high probability that the market will visit the first gap, then come back and take out the initial run that was created, okay, before it will now continue like in form of reversal. So that is exactly what happened here. This always happens all the time. Go to your chart and try to figure this out, and you will always see it there. So you wouldn't have taken the trade at this particular point. This is exactly where you would have taken the trade, and you make a lot of profit from this particular run. And you would have been taking trades all this way up because you already know that the market has changed a structure and it is a reversal. So let me just quickly show you. This is exactly where you would have taken your trade, or maybe you would have taken the trade at this particular point, as the case may be. So I don't want to make this video very long, but you can go back to your chart. Okay, you can go to your chart, place it here, take your profit at this point, take your profit just above it. So go to your chart, any chart of your choice, and try to check key zones. You will always notice this happening. So this is exactly how to identify the right time to be in the market. So the next thing to do is to know your sessions. You understand? Normally, don't get into the trade in Asia session. Okay, the best time to get into the trade is in London session or in New York session, more especially in New York session, because in London session the market always does its manipulation. But this is another topic of the day. I just wanted to show you the exact time you need to be in the market when you have reversal. So if you find this video useful, please click the like button and the subscription button to help us grow this particular channel. And over here are other videos about forex trading that we did, so you can go through them. Definitely you are going to learn a lot of things about trading. See you in the next one, and remain in the channel.